Hi everyone. How you doing? Welcome to another session. So again, to the upper left of my screen, you can see we have these topics we're going to be talking about today. So this is video 6, and we will be talking about what is a currency, what are currency exchange rates, how do we trade currencies? And after we're done with that, we talk about what is a PEEP, a lot size, and a pipet. And then how do we calculate pips? All right, that means how do you determine the number of pips you have on a particular trade? It's very simple. I'm going to show you a tool to use. Yes, and then at the end, you have an assignment on babypips.com. So again, what is a currency? What are currency exchange rates? How do we trade currencies? What is a peep, pipet, and a lot? Right. So I should have added those ones there also, a pipet and a lot. And then how do we calculate pips? And then at the end, you have an assignment on baby pips. All right. So to the center of my screen, you can see this image. I'm sure if you watched the video too, you must have seen this image, right? So yes, I'm bringing it again on this call because today we are talking about what a currency is. And as you can see, these are currencies for different countries. To the up side, we have the Nigerian naira. Then we have the United States dollar. Then we have euro, British pound, Canadian dollar, Japanese yen, Australian dollar, Swiss franc, New Zealand dollar. And so these are currencies for different country. So aside from the Nigerian naira, we have above, these are the major 8 currencies we trade: United States dollar, euro, British pound, Canadian dollar, Japanese yen, Australian dollar, Swiss franc, and New Zealand dollar. Yes. So now, what is a currency? That's the first thing. What is a currency? So let's check Google and type what is a currency. Let's see the definition that uh, we get. So according to Wikipedia, yeah, you can see a currency is a standardization of money in any form, in use or circulation as a medium of exchange. For example, banknotes and coins. So the most important thing I want you to pick from this definition is medium of exchange. So a currency is a generally acceptable medium of exchange. For example, a banknote and coins. A more general definition is that a currency is a system of money in common use within a specific government over time, especially for people in a nation. See, over time, the system of money that is commonly used within a specific environment. So there is a place where this money can be of use, or this banknote or these coins can be of use. Remember in the last call, I was giving you an example of you having the naira, and then maybe you travel to another country. Now you have to change your money, you have to change the money you have with you to the country's currency in order for you to be able to spend. And then I gave you example, let's say, and I also told you in the second call, video 2, where that you can't, some companies in Nigeria, yeah, there are places where you can spend foreign currencies. There are places where foreign currencies are being accepted, even though you are within Nigeria. But the general acceptance that what people are used to and what you will spend more is the Nigerian naira because you are in Nigeria. Although there are places where dollar is accepted, there are places where euro is accepted, but then the widely, like generally acceptable that a lot of people use is the Nigerian naira because you are in Nigeria. And then when you travel to United States also, you're going to be spending dollar more, right? So the country, each of this country you travel to, their currency is the highest. That is going to be the medium of exchange in most places. Even though some other places can accept foreign currency, but majority of the places you're going to be going to, you have to have the currency notes with you. You understand? So in Nigeria, yeah, you need to have Naira in order to do a lot of things, even though there are places where dollar is accepted. In United States also, you need to have dollars to do most of the thing, even though other currencies are accepted. So a currency is a medium of exchange that is generally acceptable within, can you see, according to that definition, it says within a specific government over time. So we can say within a specific area, because something that is generally acceptable in Nigeria here may not be generally acceptable in the United States. Naira is generally acceptable in Nigeria, but it's not generally acceptable in the United States. Just like how the Canadian dollar is generally acceptable in Canada, Australian dollar might not be generally acceptable in Canada. You understand? Although there might be some places where you can pay, but then it might not be generally acceptable. So that's a currency. Currency is a medium of exchange that is generally acceptable within a specific government, or you can say within a specific country. Right. So yeah, exactly. That is what an exchange rate is. That is what a currency is, rather. And then the next subtopic we have is what is currency exchange rate? That's it. So what is an exchange rate? Let's come also to yeah, and then we'll put what is currency? What is currency exchange rate? So Wikipedia also gives us the definition. In finance, an exchange rate is the rate at which one currency will be exchanged for another. Okay? In finance, an exchange rate is the rate at which one currency will be exchanged for another. I've given you some examples while making these videos. I think in video, I can't remember what video now. I think I gave an example in video 2 or video, I can't remember, but then I'm sure if you've been following these videos accordingly, you must have seen where I gave an example of Nigeria and then UK, right? And then using the exchange rate, how much are you going to earn? How much are you going to lose, right? So the an exchange rate is the rate at which one currency is being exchanged for another currency. All right. So now if I have Naira, I want to change to dollar, I have to exchange it at the present exchange rate. Okay. So now the increase and the profit and loss we make from the forex market is determined by the exchange rate, and the exchange rate is determined by the activities, the series of activities that is going on within a country or that is going on in a country. So the economic activities is what affects the exchange rate, and then the exchange rate is what determines our profit or loss from the market. Can you see it now? So whether we make profit or whether we make a loss is determined by the exchange rate. And the exchange rate itself is determined by the economic activities that is going on within a country. Okay, so if I want to change Naira to dollar, we know presently now $1 equals about 760 Naira presently. So now if a couple of weeks have passed and then the value reduced from 760 to 500, exchange rate has dropped, right? And then what is causing the exchange rate to drop? Nigerian economy is getting better. Okay, so now the economic activities is what affect the exchange rate. The exchange rate is what affect us, whether we make profit or loss from the market. So if I want to change dollar to euro now, I think euro to dollar is about 1.0, about 1.9 or so, exactly. Or 1 point, I have to check. So, you get, or 1.1. I don't know if it has actually got it to 1.1 back. I will check later. But then you are going to be changing at an exchange rate. So that is what a currency exchange rate is. It is the rate at which we exchange one currency for another. I hope you understand that. So if you want to change, you want to do AUD JPY, you want to convert your Australian dollar to Japanese yen, you're going to be converting it at the present exchange rate. Same thing goes on for all these currencies you have on the screen here. Okay, that's it. Again, exchange rate is the rate at which we exchange one country's currency for another. So now, how do we trade currencies? I've given you an example in the last call in one of the video, right? Talking about trading, and then talked about the change. I showed you a picture. This is how you trade currencies. You can either trade it physically by traveling, or you trade it online like we do, right? So yes, I've explained that to you. If you've not watched the video, then you're doing yourself something that is really not cool, because you have to learn this thing. That's why I'm arranging the video from 1, 2, 3. So don't jump videos. I don't expect you to be watching video 6 if you've not watched video 5, 4, 3, 2, and 1. Okay, exactly. So please, if you've not watched the video, if you've not watched the previous video and you're here now, stop this, go back and watch the previous videos before coming to this one. There's no need to rush. Okay, exactly. Yes, so now I've given you an example of how we trade currencies in the past videos. Now we're going to be going into what is a peep. So what is a peep, a pipette, and a lot? Okay, so what is a peep, a pipette, and a lot? So now I'm going to come here, and then I'm going to do this, and then come, what is a peep? And then under baby peeps, yeah, babypeeps.com. Okay, I'm going to click what is a peep in Forex. And then you have this. Okay, what is a peep in Forex? And then let's read now. It says, you've probably heard the term peep, point, pipette, and lots thrown around. And now we're going to explain what they are and show you how the values are calculated. Okay, so now we just scroll down to what is a peep. As you can see, the unit of measurement. This is it. A peep is a unit of measurement to express the change in the value between two currencies. Again, the unit of measurement to express the change in value between two currencies is called a peep. Now, look at the example that was given here. If Euro USD moves from 1.1050 to 1.1051, you can see the numbers change there from 0 to 1. That 0.0001 USD rise in value is 1 peep. So if EU moved from 1.1050 to 1.1051, Euro USD has moved by 1 peep. So how do you know this now? How do you determine this? You can see all of this number to the right here. This is where we get the present value for Euro USD. Okay, so now if we come here now, let me remove this now. This is the chart for Euro USD, and the present value for Euro USD is current exchange rate is 1.07. 1.07. So let me just zoom so you can see. Exactly. You see this 1.07696. Okay. That's it as a current exchange rate for Euro USD. So now if I go down to, so like they were saying here in this area here, that if Euro USD moves from 1.1050 to 1.1051, Euro USD has increased by 1 peep. That's how you get it. Very easy. It's just the 4 numbers after the decimal. Okay. So the present price for Euro USD now at now is 1.0770. And let's see if it gets to 1. That means the price of EU has increased by 1 peep. Now it just got to 1. You can see Euro USD has increased by 1 peep. That's it. So peep is the unit of measurement, right? Between, I've forgotten how the definition was again, the unit of measurement to express the change in value, exactly, between two currencies. So this is two currencies, the euro and the dollar, just like we have here. This is euro and this is the dollar. That's it. So it is at 0. Again, let me bring this and then we say the current exchange rate now for Euro USD sorry. The current exchange rate now is 1.0770. That's it. If it increased to 1.0771, if it goes to 1, EU has increased by 1 pip. But if it goes down to 1.0769, it has reduced by 1 pip. So let's see it now. It's still at 0. Now, can you see it just got to 69? It has dropped by 1 pip. That is it. EU has dropped by 1 pip. If it goes up by 1.0771. That's increased by 1 pip. If it goes down to 1.0769, it has reduced by 1 pip. Okay, so let me give you a quick assignment, which I want you to do and you send to me. Okay, so if the value of Euro USD presently, while I'm making this video, is 1.0767, just like we have there. That's it. If the value of Euro USD presently is 1.0767 and later increased by 150 pips, 1. Okay, there's assignment 1. What is the present? If the present value, so the value itself is exchange rate. So what is the present, or what will be the present value? What will be the present value of Euro USD? So do the calculation and send to me. All right, that's going to be your assignment 1. And then number 2, let me put this as the second assignment. Okay, this is it. This is 1. And then the second one, which I'm going to give you also, is going to be if the value of Euro USD presently, again, is at 1.0767 and later reduced by, again, 150 pip, what will be the present value for Euro USD? So send this to assignment to me, your answer, and I will mark it. All right, so that's assignment. So let me take, let's put this as assignment or homework. This is homework. Okay, good. So let me just take a screenshot of it so I can. Perfect. All right, so that is 1, by the way. So now I'm sure you know how to calculate a PEEP now, right? So if I come to another currency, for example, and say Euro card, okay, now, if I'm going to ask you now, what is the present value for Euro card? What is the present exchange for Euro card? You can see 1.43662. Let me zoom so you can see it. 1.43667. That's the present exchange rate now. Okay, so that's how you get the present exchange rate. Just look to the right, you see what the exchange rate is, and you can tell if it has increased in PEEP or it has increased in, or it has reduced in PEEP. But now it says here that four numbers after the decimal. But if we go back to Euro USD now, you can see that instead of 4, we are having 5 numbers here. Let's go back again. It says 1.07651. 651. but it is supposed to be 4 decimals, right? No, it's supposed to be 4 numbers after the decimal, but here we have 1, 2, 3, 4, and 5. So the fourth one is always the peep. The fifth one is what we refer to as the pipet. Okay, the fifth one is what we refer to as the pipet. Okay, you can see what is a pipet. These are Forex brokers that quote currency price beyond the standard 4 and 2 decimal places to 5 and 3. So this pipet are being, according to, these are Forex brokers that quote currency price. I'm still going to be teaching you what a broker is, what Forex brokers are, and then the one you should choose. So now this last pipet, the last number you see after the pip is being done or introduced by um, by each of these brokers. That's why they can be different. Because if you come to Pepperstone, it has this. If you come to FXCM, it might be having another number. Okay, maybe a little bit higher, a little bit below. But these ones are determined by Forex brokers, right? So this is a PEEP, and the number after it is the PIPET. That is the fifth number is the PIPET, PIPETTE. Come here and say, this is the PIPET. Exactly. So this is a pipet. But then I want you to only be focused on this. This is a peep. Okay, so 4 decimals after 4 numbers after the decimal. That is what gives you the peep, the fourth one, right? So this is it. Now, every currency, all of these currencies each have 4 numbers after the decimal. But in some cases, you will find 2 instead of 4. Now, let me show you an example. Let me go to CAD JPY, for example. Now, CAD JPY, what is the present value for CAD JPY? What is the present exchange rate? You can see 104.700. Let's change to 702. Now, this is not 4. This is how many number after the decimal? 3. The last one being the pipet, the second one being the peep. So let's see what Baby Peeps has to say about that. Okay, now a peep is usually the last decimal place of a price quote. Like I told you, the fourth one, just like we showed you here. Now, most pairs go out to 4 decimal places, but there are some exceptions like Japanese yen pairs. So now the Japanese yen pairs, any pair that has JPY is going to give you 2 decimal instead of 4 decimal. Now, not putting into consideration the pipet now. So every pair, Euro USD, Euro card, AUD card, all of that, you will see 4 decimals, 4 numbers after the decimal, right? 1, 2, 3, 4. But when it comes to the Japanese yen pairs, that is the JPY, you're going to see 2. So for example, Euro USD, it is 0.0001. And for USD JPY, it is 0.01. That's it. So JPY is 2, every other currency is 4. So you can see, look at this CAD JPY, 2 decimal. If I click AUD JPY, 2 decimal. Aside the pipet, if I click Chef JPY, 2 decimal. Every pair that has to do with every currency that is traded with the JPY is 2 decimal. And then for the this is Chef JPY now. The current exchange rate is 155.007. That's it, 155.007. This 0 here is the peep, and then the 7 is the pipet, but we are only interested in the peep. Okay, so for JPY, it is 2, and then for pairs outside JPY, it is 4 decimal places. Okay, that's it. So that's how you get your peep, and that's how you get the pipet. All right, so now we've discussed what a peep is, what is a pipet, and now we are left with what is a lot. Okay, so we'll come here and then we go straight to what is a lot in Forex. So you can see Forex is commonly traded in specific amount called lots. Basically, the number of currency units you will buy or sell. So a lot is a unit measuring a transaction amount. When you place orders on your trading platform, orders are placed in sizes quoted in lots. So I know this might be looking too big for you. A lot simply means, the way I understand it is, a lot determines the amount I'm risking on a trade. Let me just make it very easy for you to understand. So a lot determines the amount I'm risking on a trade. But if, let's say, for example, now I want to get in on Euro USD and I want to risk Euro USD now. Let's say I want to get in on Euro USD and I want to risk, let's say, $50, for example, now. So I want to risk $50, for example. Now, I will not just, if I want to risk $50, I will not go on my trading platform and click $50 or type $50 risk. That's not how it's done. So I'm going to use a lot that is going to equal $50 when the stop loss get hit in case it's a losing trade for me. So I'm going to use the lot to determine, and in order to get your lot, you need to have a good understanding of the PEEP and your value per PEEP, because we're going to use the value per PEEP multiplied by the PEEP. Then the answer we get, we divide it by the amount we're risking. That's how we get the lot we want to use per trade. All right. So now, how do we calculate a lot? So in order to calculate a lot, you need to have first an understanding of what. So these are the things you need to calculate a lot. So now, how do I calculate slash determine a lot? Okay, so how do I calculate or determine a lot? Now, you need these things. First, number one, know the amount you want to risk. Number two, know the value per PEEP of the currency you want to trade. Number three, know the PEEP, know the stop loss in PEEP, know the stop loss in PEEP you want to risk. Exactly. Those are the three things you need in order for you to calculate or determine the lot size per trade. The first one is know the amount you want to risk. Number two is know the value per PEEP of the currency you want to risk. Number three is know the stop loss in PEEP you want to risk. All right. So now let's look at these three things. Know the amount you want to risk. What this means is know, like you have to determine. The market is not going to determine that for you. You have to determine that yourself. How much of my account am I willing to risk on this trade? So now you want to trade Forex. You want to buy a particular currency, believing that after doing your analysis, this pair looks like it wants to go up. So therefore, I'm going to buy Euro USD. Now, if you're buying Euro USD on your account, on your trading account, your MT4 account, right? Okay, so I'm still going to be explaining the MT4. I just checked now and I'm going to be explaining the MT4 so you can understand it But then after knowing the amount you want to risk, you need to go to your MT4 to place that trade. Now, you're not going to be going to the MT4 and clicking $50. You're not going to see that. What you're going to be seeing is lot. So the lot is what will determine how much you're risking on a trade. But then you need to first know the amount you're risking. This is number one. Number two is know the value per pip of the currency you want to trade. So each of these currencies have their value per pip. Now, how to calculate the value per pip can be a little bit too stressful. So I'm going to be showing you a very easy method on how to calculate the value per pip. It's very easy. You just have to do a couple of things, and that's going to be all. So the first thing you are going to do in order to calculate a value per pip for a currency is this. Okay, so this is the first thing you're going to do. All right. I'm coming. Let me pull this up. All right. So it is still under baby pips. As you can see, I'm going to send this link to you. All right. I'm going to send the link to you so you can have it. I'm going to put it under the video so you can use that to calculate your value per pip. All right. So we're done with that. Like I said, the first thing, know the amount you want to risk. So if I have $100, maybe I want to risk $5. Just know the amount you want to risk. That's it. Then know the value per pip of the currency you want to trade. So I'm trading Euro USD. I want to buy, or maybe I want to sell. In order to get the value per pip for Euro USD, just click on this link. It's going to bring you here. It says pip value calculator. So then you scroll down to this area here. And then what currency do you want to trade? You've already determined the currency you want to trade. Yeah, this is Euro USD I want to trade. The next thing is going to ask you for the asked price. Ask price. This is the current price for Euro USD. So you don't need to fill this in. They're going to fill you in. This website is going to just give you the current price automatically. The only thing you need to fill is number one, choose the currency you want to trade. There's a lot of them. And then the next thing is your position size. That is the unit, 100,000. So you just put 100,000 and then you click calculate. That's all you need. And then it's going to give you the pip value, which is 10. Again, you come to this website by clicking on the link, and then you choose the pair you want to trade. By default, it is set to Euro USD, but you change the one you want, maybe USD CAD, USD JPY. You pick, and then ask price is the current price. You don't need to fill this one. It's going to be filled automatically. So all you have to do is just choose the currency, and under position size, put 100,000, and then click calculate. And then it's going to bring this out as 10. So the value per pip for Euro USD is 10. You have your second answer. Then the third one is know the stop loss in pip you want to trade, or know the stop loss in pip you want to risk. So if you're buying Euro USD, remember buying means you want price to go up because you're buying, right? So now you are going to be, okay, first, I think I need to explain what a stop loss is, what an entry is, and what a take profit is. Okay, so what is a stop loss? What is take profit? I'm sure you must have heard of this stuff a lot of time, right? Stop loss, take profits, mostly those two, stop loss and take profits, and then entry. So what is an entry? What is a stop loss? What is a take profit? Okay, so let me talk about those ones also. So is a what is an entry? What is a stop loss? And what is a take profit? Exactly. So now what is an entry? What is a stop loss? What is a take profit? So if I am buying, I am looking to buy. That means I'm going to be buying at a particular price. Definitely in the normal market world, if I'm going to buy, for example, I want to go and buy an iMac now, I'm going to be buying it at a certain price. So that price in Forex is what we call the entry. So entry means you're buying at a particular price. That's what an entry means. Now, what is a stop loss? Stop loss. Entry. Entry means buying at a particular price number. That's it. I'm buying at a particular price number. Now, what is a stop loss? Just like the name implies, stop loss. Just look at it. Stop loss. Now, think for a while, just for a couple of seconds. Stop loss. Now, what this means is that since I'm buying, there can be every tendency that because I've done an analysis and I want price to buy, there's every tendency that price may not buy and continue to just drop. Because if I'm buying, if I'm looking to buy, it means that price is selling and I want it to buy up. You mean now price is selling down and I want it to buy up. Now, there can be every tendency that this can just continue to drop. And if I'm buying at a particular, remember my entry means buying at a particular price number. So let's say I want to buy this price number here says 1.000. Let's say this is where I want to buy Euro USD. I want to buy Euro USD now at 1.000. That's it. This is where I'm buying Euro USD now, for example. I can make this buy black. That's where I'm buying. Now, what I'm saying is if price gets here, I want it to reject and start going up. That's it. That's me. I'm buying at this price number, this particular price number. But now there can be every tendency that price can just continue to go down. And the moment price go below my 1.00, I'm going to start being in a loss on this trade. That's it. I'm going to start being in a loss on this trade. So how do I stop my loss? This is it. How do I stop my loss? Now, there are two ways you can stop your loss. You can either stop your loss manually or you can allow the broker to stop you out. If you stop your trade, if you stop your loss manually, then that means you are closing that trade yourself. So let's say you're risking a particular amount. You've decided, remember, know the amount you want to risk. You're risking, let's say, $10, for example. And price starts to sell down, depending on the lot size you use. The loss as it's going can either be a very big loss or a small loss reading, depending on the lot size. So one thing is certain that the moment price goes below your entry at 1.0000, you will start reading in a loss. And the loss will keep increasing as this is dropping. So now, how do you stop your loss? You can either close it manually or initiate a stop loss order. So what that means is you have placed an order to your broker that, okay, if price continue to sell down to 0. Let's say 0.9960, please stop me out. That's it. So let's say 0.9960 now. 0.9960 or 99, yes, 60. 9960. So this is it. And then we make this red. So what that means is I've told my broker that I've initiated a stop loss order that if this continues to sell down, please stop me out. And this can happen because, and I think this is important because at times you might not be on your screen. You might not even be watching the trade. You might be busy doing something else. And it is good to have a stop loss order on every trade. That's how I see it. And that's how I do it. Because me, before I get in on a trade, I've already agreed within myself that this is where the stop loss is going to be. So what I'm saying is that if price does not go my way and continue to drop, this is where I'm okay taking the loss. And I've already calculated my amount I'm risking. So I'm going to calculate that, okay, from this entry to this stop loss, I want all of this move to give me a $50 loss. I want all of this move between the entry and the stop loss, maybe $100 loss. There's how I can calculate it. And then when I'm executing the trade, I'm going to use the lot size now to give me $100 loss or $50 loss, because there's no way we can place $50 as it is on when we're trading. We're going to use the lot size to do that. That is why you need to know the amount you want to risk. Like I said, let's say $50, I'm risking $50. Know the value per peep. I just told you how to calculate the value per peep. And then the last one says, know the stop loss in peeps. So you need to know the stop loss in peeps also. How do we know the stop loss in peep? I just told you what a peep is, right? If the present value for where you want to buy is at 1.000, and the stop loss is where you are okay taking a loss is at 0.96996. All you have to do to get your stop loss is to just subtract. So we're going to subtract 1.0000. We're going to subtract it with 0.9960. That's 0.9960. That's going to be this is 0.04. I think that's about 40 pips or so. Let me check quickly. Let me just use this. I like using this one. I can understand quickly with this. So let me use this. Entries at 1, stop losses at 9960. So yes, this is a 40 pip stop loss. So now how did I get this? I'm going to teach you when we come to understanding trading view. But this from here, from 9960 to 1.0, that's a 40 pips. So I'm accommodating 40 pips stop loss. Let's see. Let's come again here and put 0.9960 plus, should I say 40 now? No. So 0.9960 plus plus 0.0040 plus 0.0040. That's going to give us 1. So 1 is the same thing as 1.0. Okay, so this is a 40 pips. So I've already determined the pip, which is 40 pips. From this entry to the stop loss is 40 pips. So the entry is the black line. Okay, and then stop loss, yeah, this is the stop loss order initiated, and from this entry to this stop loss is 40 pips. So now I've gotten all the thing I needed now to calculate my loss. So I've gotten an amount I want to risk. Maybe I want to go in for $50. Know the value per pip of the currency you want to trade. I know that also. Then know the stop loss in pips you want to risk. So I'm risking 40 pips. What I'm telling the broker is, okay, if price does not reject for my entry and continue to drop, I'm okay taking 40 pips. Now, this 40 pips is the same thing as me saying I'm okay taking $50. That's it. But now, how do I calculate? How do I get the lot size now that will equal $50 at 40 pips loss? What I'm going to do now, okay, yeah, let's say this is 50 pips. $50 rather. Number one, let's say I want to risk $50. So now we have all we need now. So it is going to be now to get the lot. So in order to get your lot, it's going to be lot size equals to 1. Okay, it's going to be 1. That is know the amount you're risking, divided by 2 times 3, divided by 2 multiply by 3. That's it. That's how you get your lot size. So lot size is equals to 1 divided by 2 multiplied by 3. Now, what is 1? 1 is know the amount you want to risk. That's $50. So it's going to be 50, okay? Okay, it's going to be 50 divided by, okay, it's going to be 50 divided by, what is 2? Know the value per pip. Remember, what is the value per pip for Euro USD? 10. So you just take that 10, then you multiply 10 by number 3. What is number 3? Know the stop loss and pip. You've determined that already, 40 pips. So 40. So now we're going to have what? 50 divided by 10 times 40. That's going to be 50 divided by 10 times 40 will give us 400. Exactly. So now come again to the calculator and then we do 50 divided by 400. That's going to give us 0.125. That's it. So our answer is going to be 0.1. So lot size equals 0.125 exactly. So the lot size we're going to be using now is going to be 0.125. But now, when you want to place this trade on your MT4, you are only allowed to place a lot that has 2 decimal numbers. So we cannot place the 5. So we're going to be left to either decide to leave it at 0.12 or round this 5 up and put it at 0.13. That's it. So 0.125, that's going to be the lot size to use. But then you cannot place this 5. So you can either leave it at 0.12 or leave it at 0.13, depending on you. All right. So yes, this is how you get your lot size in order to trade. So now if I'm going to my MT4 now, I'm going to be placing this at 0. Let me show you an example. Let me go straight to my MT4 now and come to trades. Let me go to Euro USD and then let me click on this. So let me send the screenshot. Okay. All right. Okay, there we go. All right, so we're done with this. I can just delete this and delete this. So now this is MT4. I'm going to be explaining this also later. I just wanted to show you now. This is if I want to place the trade now. You can see this is lot. We only have 2 decimal after, like only 2 decimal numbers, 0, and I can increase this 0, 1, 0, 2, 0, 3. So I cannot use the 0.125 here. I cannot use the 5. So if I'm going to place this trade now, it's going to be 0.12, or I decide to put it at 0.13. So I cannot put the third number. Okay, yes. So that is how to calculate the lot size for a trade. So now I've explained entry, I've explained stop loss. So now what is a take profit? Just look at this, stop loss. Then the next one is take profit. So one is stopping me from taking a bigger loss. And then another one is stopping me, from taking a bigger profit. So we can say stop loss. It can also be stop profit. But then just like how we know it, it is take profit. So again, you can either take your profit manually, or you can initiate a take profit order telling your broker that once price gets to this particular price level, please, I'm okay, take me out of the market. So if stop loss is below, where do you think take profit will be? Take profit will be above, up here. So I can decide that, okay, I'm looking to buy here. In case it doesn't go my way, please broker stop me here down. In case it goes my way, I'm aiming for, let's say I'm aiming for 1.02 as my take profit level. So 1.02, that's where I want to take my profit. Yes, so somewhere here I can put this as, let's put this as green now. Green, something nice. So exactly, so let me remove all of these, remove these, take this off, take this off, take this off, and this one, and this one, this one also. Exactly. So now this is a take profit area. What this means is if price, comes to my entry and, start to buy up, I'm telling my broker to please take me out here. And this also is a peep. So if price is at entry, you entered at 1.0, the stop loss is 40 pips. You done the calculation. How many pips is going to be this take profit? Let's see. So if you're getting out at 1.02, 0.02, and your 200, and then your entries are minus 1.0000, this is going to be 0. This is going to be 2. So I think this is going to be about, give or take, I think this is about 200 pips or so. Let me confirm. I'm going to use this tool to confirm quickly. So if my entry is at 1.00 and my profit is at 1.02, that's going to be about 200 pips, definitely. Yes, that's 200 pips for me. So I'm okay with 40 pips loss. I'm aiming for 200 pips. So I want price to go up 200 pips to the upside. 200 pips is a lot, so it's going to take a while, but then you can get there. I've caught trades of more than 200 pips before. So yeah, it's possible. Definitely. So that is what take profit is. Okay. Up here is going to be what? Take profit. Definitely. So this is entry, this is stop loss, and this is take profit. And then how do you calculate your lot size? I've told you how to calculate your lot size and how to determine it exactly. So I've explained to you what a currency is, what a currency exchange rate is. I've explained to you what a pip is, what a pipette is, and what a lot is, and how to calculate the lot size to use. Okay, and I've given you an assignment. Right, so now your second assignment for this trade, in order for me to be sure that you understand this lot, I'm going to give you another homework now. So homework 2. Okay, now we're going to use another homework is you want to buy USD JPY at, so let me, this is homework 2 now. I'm going to come up with an homework for you now. Let me quickly check USD JPY. What is the present value? So I'm not going to give you a present value. All right, so I'm going to allow you to check the present value, or no, let me make it unison. So USD JPY present value is 139.56 while I'm making this video. So you want to buy USD JPY at 139. This is the present price of USD but then I'm going to take it down to 139.0. So you want to buy USD at 139.00. That's your entry now. You want to buy USD at 1.139.00, having a stop loss of 30 pips, having a stop loss of 30 pips, having a stop loss of 30 pips, and a take profit of 90 pips, and a take profit of 90 pips with a 50. So we're going to use $50 also with a $50 risk. What will be your lot size to use? Exactly. So your assignment, your homework one is, what will be the lot size to use? Okay. No, this is supposed to do this, sorry. So supposed to have this down here. So homework 2. So homework 2 now, what will be, number 1 is, what will be your lot size to be used? So what's going to be the lot size that is going to give you a $50 risk? You are buying at 139. I've given you 30 pips stop loss, 90 pips take profit. You're risking $50. Your first homework, your first answer under homework 2 is, what would be your lot size to be used? No, or let me say, what is the price of the stop loss? So what is the price of the stop loss? So what I'm saying is, just like the example I gave you here, this one, I said 40 pips. So 40 pips was at what price? 0.966 or 9960. That's what I want you to do also. If the price of USD is 1.39, having a 30 pip stop loss, what is going to be the price of that stop loss at 30 pips below? And then your take profit of 90, what is going to be the price? So I want to know the price of the stop loss, not the pip now. We know the pip is 30, but what is the price? And then your take profit also at 90 pips, what is going to be the price? That's it. So your first one is, what is the price of the stop loss? The second one, the second assignment, number 2, is what is the price of the take profit? Okay, and then your number 3 is, what is going to be the lot size? That's it. What is going to be the lot size? So you have 3 answers. I'm expecting 3 answers from you. What is the price of the stop loss? So you're going to do 30 pips below to get what the price is going to be below 139. And then since you are buying also, what is going to be the take profit at 90 pips? I want to see those 2, and then you do your lot size. Remember, the formula for lot size is 1 divided by 2 times 3. And I already told you what 1 is. Know the amount you're risking. So it's going to be, let me just give you how you should do it. It's going to be 1 divided by 2 times 3. I've given you all the parameters for 1. I've given you the 2, and then number 3. Oh, number 2 is know the value per pip you want to trade. So number 2, know the value per pip. So you are going to come here in order to get the value per pip for USD I can just come to USD here, click on it. Position size is always at 100,000. Okay, I'm going to explain that to you later when I'm talking about MT4. And then you get your value per pip, and then you do the calculation, and then you give me your answer. So this is your homework exercise 2. Let me take a screenshot of it. Exactly. So yes, do this and send to me before you proceed to video 7. Okay? Make sure you do this and send to me before you proceed to video 7. All right, so that is going to be all for this session. You have an amazing day. Bye-bye.